Ladies and gentlemen, my name is Greg McCloskey from ForexLive.com. Today's date is November 16th, 2022. This is the morning Forex technical report. We just had retail sales come out better than expectations at 1.3% versus 1.0% expected. We also saw the control group and the X-Auto and the X-Auto and gas come in better as well, with revisions higher in things like the control group and the X-Auto and gas as well. So overall, a solid report in the time when the U.S. is supposed to be heading more towards slower growth. So this will keep the Fed on a restricted path with expectations for still probably 50 basis points in December, although we still have one more jobs report and also one more CPI report before that meeting on December 14th, I think. So let's get into the technicals. We'll start by looking at the euro versus US dollar. Looking at the euro versus US dollar, we did get a sharp move to the downside. Yesterday, we broke below this support area through here with swing levels defining the level not only on the hourly chart, but it was also on the daily chart. We'll keep to the hourly chart here, but you can see these swing levels through here, and the market moved above them up to the top side, and then we came down and broke below those levels on the way to the downside. What was the catalyst? Well, we had the Russian reports of a potential Russia bomb that killed 2 people in Poland. This crossed the border of Ukraine, but we found out today that the actual culprit of that bomb was likely a Ukrainian missile trying to shoot down the Russian missiles that were heading into their country. So sort of friendly fire there. So we saw the euro versus US dollar cover the gains and move back up to the 200-day moving average. That's the green line in this chart, the overlay green line on the hourly chart here. We did move above it again for the second day in a row. But the price could not sustain the momentum above that level. That's going to still be key going forward. We need to get back above that level if the buyers are going to remain controlling the euro versus US dollar. Be aware and be prepared. On the downside, this swing area still comes into play through here, 1.03485, 1.03657. I can't help myself. I'll go to the daily chart to show you the importance of that area. And if you go back in time, not just recently, but in time, right through here, we had swing lows, swing lows, swing lows, swing lows. So 3 months in a row, the market bottomed against that level early July before breaking to the downside, then re-established the level as resistance here in the month of August, only to come up to it again in the current month, just this week and last week, as a matter of fact, where the market did find resistance sellers against it before breaking to the upside and getting above the 200-day moving average yesterday, failing, getting above it today, and failing so far. We need to get and stay above the 200-day moving average, folks. The price has not traded above or closed above the 200-day moving average since, well, this day, just barely, which was back in June 16th of 2022, when the price was at 119.90 ish area. Now the 200-day moving average is 1.04, so about 15 big figures less than that. It's an easier hurdle to get to and through, but we know the fundamentals have changed, and so still need to get above that level in order to push the technical bias more to the upside. And then we'll look toward the high from yesterday and the 50% retracement at 1.0515 if it's able to get above that level. On the downside, we'll of course be watching this 48 level to 65 level as support, and indeed the price off of the retail sales did move down lower, but we didn't even get close to the this swing area through here. Back on the hourly chart, if we get below that level, the rising 100-hour moving average will be in play. We haven't been above or below that 100-hour moving average since this date, November 10th, so last week. So we need to get below that 100-hour moving average and end this swing area right here to increase the bearish bias for the euro versus US dollar. Let's take a look at the dollar versus yen. We did see a little spike higher off the retail sales in the dollar versus yen. We are off of that level, but within this swing area here where the price has swing low right here, swing highs through here, and then swing lows through here. You can see how the market's been waffling back and forth with this area sort of defining the top and bottom side. We went a little bit above it and trading here today before rotating back to the downside. to another swing area down here, and looking up back toward that area up here, also where the falling 100-hour moving average comes in at 140.23. So get above the 140.23. Recall last week the price came up to those levels through here, and then the prior week the market came up to that 100-hour moving average here. So the last 3 times the price has tested the 100-hour moving average, we found sellers leaning against that level. So getting above the 100-hour moving average would be somewhat more positive for the dollar versus yen. After that, we have the 100-day moving average not far away at 140.86. Well, it's 60 pips. These ranges in the dollar versus yen are fairly large. So getting above 23 and then the 86 level here would open the door for further upside momentum for the dollar versus yen. The 50% retracement is of the move all the way going back to this low way back here, August low for the dollar versus yen. Looking at the daily chart, this is what it looks like on the daily chart. In trading yesterday, the price low came down at close to the 38.2% retracement of the 2022 trading range. This is the low going back to January. This is the high that we saw in trading last month. So the 38.2% retracement is one of those levels that need to get to and through if the price is going to move lower, 137.24. So keep that level in mind. Right now we're ping-ponging between the 38.2% retracement and the 100-day moving average above, and the market seems to be happy, comfortable there, but we know the technical levels, including those levels on the hourly chart, that are in play, so be aware, be prepared, and you are now. Let's take a look at the sterling versus US dollar, and this again on the hourly chart, some waffling back and forth here. We had CPI data come out at 11.1%, much higher than the 10.7%. Things aren't looking great in the UK, but a higher pound helps to lower inflation, but higher inflation helps to lower growth. So they're really stuck between a rock and a hard place here. And following the technicals might be wise for this currency pair. Looking at it, I on the downside, the rising 100-hour moving average is coming down toward the low from yesterday's trade. Again, this is after the bombs in Russia. The 100-hour moving average comes in at 117.768, which is just below the 88 level that we saw in trading yesterday. So be aware of that level. We're still, I don't know, 100 pips or so, less than 100 pips, 90 pips or 80 pips away from that level. But it's still in play on the downside. On the top side, as you can see, let me put this on the 4-hour chart. If we look at the 4-hour chart, this swing area right here comes more into focus. You can see how we had different swing lows and highs through here. Swing low, let me get on the arrow here. Swing low, then we reverse to it becoming a resistance area through here, and it wasn't until the recent week that the market was able to break above that level. So this is still a area that we should pay attention to, despite the ups and downs around that level. On the downside, this other swing area through here on the daily chart is somewhat key here for the currency pair. Just keep that area 117.17 to 58, and that compares to the 100. This is on the 4-hour chart. That compares to the 100-hour moving average, which is above that area right through here currently at the moment. So that's going to be the first target. And then we look at the swing area through here. So that's the sterling versus US dollar. Finally, we'll take a look at the dollar versus Canada. They had their CPI data come out here today. And what is interesting in this pair, you see this blue line right here that represents the 100-day moving average. And you can see how the market's been skimming along that level with little breaks below it. Yesterday, break below it here today. We just based against it and rotated to the upside. The 100-hour moving average above at 132.99 is another level of significance here. So ping pong between the 100-day moving average in this swing area down here and the 100-hour moving average on the top side is key levels for the dollar versus yen. Looking for a break one way or the other for this pair. When you're going to make up your mind, we'll see. That's the dollar versus Canada. So there you have it, a look at some of the major currency pairs. My name is Greg Michalowski. Hope this sets you up for your trading day and for the future, and maybe learn something along the way. If you like to, give it a thumbs up. If you didn't like it, give it a thumbs down. Good fortune with your trading. Bye-bye now.